Okay,
See
cool.
it. Thanks.
Yeah, so I will just walk through how I think about fixed income, which I think fixed income products are pretty interesting and will get bigger in DeFi. And I think that um, any savvy DeFi investor will eventually just need to figure out how to think about fixed income. So I'll just walk through a couple scenarios and how you can look at the current rates on Element.fi and figure out maybe how you want to invest or hedge your portfolio. So Element Protocol allows you to take a vault token. So say you have like a Curve LP token or a Uniswap LP token or a Yearn Vault token, and it allows you to deposit this into Element Protocol, and it mints you a principal token and a yield token. The principal token is redeemable for the underlying. So usually the principal token is sold at some sort of discount, and when you buy it, you earn a fixed rate. And the yield token earns, its value is pegged to how much yield it actually accrues. So the core idea of Element protocols is it allows you to swap between principal or fixed income and variable income. So this is a screenshot of today's current rates. You'll see that there are 6 different Yearn vaults, and each of those vault tokens can be deposited into Element and allow the depositor to mint a principal token and the yield token. So the current prices of those are shown in the 6th column under price. You'll notice that all the principal tokens trade under $1. And all the yield tokens, you can think of that as the percent that the market thinks that the yield token is yielding over the term. So let's walk through one scenario. So say scenario 1, I'm an investor and I believe DeFi interest rates will decrease over the term. These are mostly 90-day terms. If I think interest rates will come down, I might want to lock in a fixed income rate. So what I could do is I could swap my vault token for the principal token. If you recall, the principal tokens all redeem for 1 vault token. So say you buy the Curve step token for 99 or 0.9914, you will earn 0.0086 of the vault token over the term, and that translates to some fixed APR. Scenario 2, say I'm still happy to lock in fixed rates, but I want to make a relative valuation play. Say if the Yearn vault is yielding lower than the fixed income I can lock in today, then I'm happy to take on the fixed income. But if the vault APY or the prevailing opportunity cost of the vault tokens is actually higher than the fixed income I can lock in today, I'm not going to make that trade. So this scenario for the investor only differs in that you need to consider what the opportunity cost is for locking in fixed income. So you could look at the vault APY column, or you could think about other external opportunities. If you look at the last row, there's a Try Crypto token, which the vault APY is around 27%, but on other yield aggregators like Convex and Badger, the yield's actually much higher. So this isn't as attractive as it looks. And lastly, if I have an opposite view on interest rates and I think that interest rates will increase over a period, I can actually I can swap my vault tokens for the yield token and earn and speculate on the yield. I can also compound. I can compound yield by selling principal tokens for more yield tokens and just increasing my yield exposure. So the really quick examples in the top row, if the yield token's trading at 0.0184 and the term is 90 days, the approximate APR is just the yield token price times 4. So that's the yield token right now is implying a yield of 7.36%. And if I think that yield is low and will come up in the next 90 days, I might leverage by that. And so besides the fact that you can use these tokens to hedge your portfolio and just generally earn yield, or maybe you need to hit, if you're a fund manager, you need to hit like certain thresholds, it's an interesting way to do that. I also think that the fixed income market's going to be really big, and Element.fi has, I guess, a good start in the space. It's a brand new space, and I also experiment in the protocol because I'm speculating on earning future rewards or future equity in the protocol. And I am not an investor in Element.fi.
Okay, thanks. Yeah, you kept the 5 minutes sharp.
Nice.
Or you finished, I guess. Yeah.
Great.
Yeah, are there any questions?
I have one. Like, why would the fixed yield ever be higher than the floating yield, like in the CRV SDE? Like, what market conditions created that price difference like that?
That's because the Yearn vault is not actually yielding as high as Convex's vault. So Convex's vault is closer to 8%.
Interesting.
I only know like bound protocol because there's like, yeah, this is the same, I guess, or is it different? No, bound bridge is it called?
It's pretty similar, I would say. It's a way to like slice investments into different tranches.
Yeah. I guess maybe it's different because there you just give in dollar or the stable coin, and then they do it in the background for you, I guess. I don't think you provide like, here you have to provide your liquidity token, I guess. You provide your liquidity token.
You don't have to. So I guess what you could do here is like the way you locked in fixed interest rate is different. On Element.fi, you buy principal tokens at a discount and you earn that fixed yield automatically. Whereas Barnbridge, you invest in their vault and they guarantee the fixed income investors some yield. And so they pay them back first, and then any excess yield is paid to the other people.
Okay.
So I would say Barnbridge is a bit riskier than this.
Do they have a token element, or is it how is
Element?
Yeah.
They don't have a token, but they raised a lot of money, so I imagine they're going to decentralize their governance at some point.
Okay.
How is it different from Pendle and their approach?
I don't think it's different from Pendle, but I think Pendle has liquidity mining right now. So an interesting thing to track is usage of the two protocols, and if Element can meaningfully distinguish itself from Pendle without liquidity mining, it's more attractive.
Got it.
Okay. Is it all mainnet? You know,
it's all mainnet. Yeah.
Okay. Yeah.
Yeah.
Yeah, of course. You know, you have to.
Yeah, they got like I don't know, 30 million locked right now, mostly in the principal pools. The yield tokens are just riskier, and I think people don't fully understand them.
Yeah, I personally, I don't. Yeah, it's an area I don't know much. You know, just that. Yeah. But the maximum you can get the fixed APR is like these 90 days or 180 days. This is the maximum. Yeah.
Yeah, the 180 days is the longest one, but theoretically you could use this to make like 5-year bonds or 10 years.
And how do you get the RPR? Like, you know, what do you get back?
So say row 2, look at row 2. You can buy that principal token for 0.9636.
Okay.
So you trade one Curve LUSD vault token for 0.9636 principal tokens, and that expires to 1. So you earn that spread.
Yeah. Okay. Yeah. Thanks. I know. Are there any other question? Well, I have a more personal question. Why are you interested into this? Do you have a background? Like the traditional finance in this, or?
I used to trade bonds at Barclays, but also I think fixed income the fixed income market is much larger than the equity market. So at some point, this probably will happen in DeFi. And right now, there's really